Are you tired of feeling like Uncle Sam's personal ATM? Every year you work hard, make money, and then bam! Tax season rolls in like a vacuum, sucking up your cash. But what if I told you you're probably overpaying? Yes, that's right. There are totally legal, IRS approved ways to save thousands on your taxes. And today I'm going to break them down for you. No shady loopholes, no offshore bank accounts. Just smart tax strategies that will keep more of your hard earned money where it belongs, in your pockets. In this video, I'll show you how to maximize deductions, leverage tax advantaged accounts, and legally lower your tax bill, all without needing a law degree or a CPA certification. And trust me, by the end, you'll wonder why nobody taught you this sooner. So, whether you're a 9 to 5 employee, a small business owner, or someone who just hates giving IRS a tip every year, stick around. Let's unlock the secret to paying less and keeping more. Alright, let's jump right in. Common tax mistakes that cost you money. Alright, let's talk about some of the biggest tax mistakes people make every year. And trust me, these mistakes are costing you way more than that daily iced coffee habit ever could. Not taking advantage of tax credits. You know what's better than a tax deduction? A tax credit. While deductions lower your taxable income, credits directly reduce the amount of tax you owe. It's like a coupon code for your tax bill. Some of the biggest ones that people miss. Earned income tax credit. If you earn under a certain amount, this could be worth thousands. Child tax credit. Have kids? They're expensive, but at least they can save you up to $2,000 per child on your taxes. Education credits. Paying for school, the Lifetime Learning Credit and American Opportunity Credit can save you up to $2,500 per student. Now, if you're skipping on these credits, then you're basically just giving away free money, so don't do that. Forgetting to track deductible expenses. Ever bought something for work and thought, hey, maybe I can write this off? Well, you probably can. But if you don't track it, you'll forget by the tax time, and the IRS isn't going to remind you. Home office deduction. If you work from home, you might be able to deduct a portion of your rent, utilities, and internet. Work-related expenses. Business travel, certifications, and even some uniforms might be deductible. Charitable donations. Give money to charity. Even donations of clothes and household items can be deducted. Pro tip. Use an app or spreadsheet to track your expenses year-round. Tax time will be much more easier. Filing too late and incurring penalties. Did you know that filing late can cost you 5% of your unpaid taxes per month? That's like paying interest on a loan to the IRS. And trust me, they're worse than credit card companies. If you're self-employed, quarterly estimated taxes are a must. Otherwise, penalties could hit hard. And even if you can't pay your full taxes, file on time anyway. It'll save you from late fees. Alright, quick recap. Claim your credits, track your deductions, and don't file late. Stick around because up next I'm going to show you how to legally slash your tax bill with the right strategies. Maximize deductions and tax credits. Tax season comes around and you're stuck asking the age-old question, do I take the standard deduction or should I itemize? Choose wrong and you could be leaving money on the table. Standard deduction versus itemizing. What's better? Most people take the standard deduction because it's simple and reduces taxable income automatically. In 2024, it's $14,600 for single filers and $29,200 for married couples. If your itemized deductions don't add up to more than that, the standard deduction is the way to go. But if you have high medical expenses, mortgage interest, or major charitable donations, Itemizing could save you even more. Business deductions. Side hustlers and freelancers, pay attention. If you have a side hustle, gig work, or a small business, you can deduct business related expenses like home office costs, business supplies and software, travel and meals for work, internet and phone bills, if used for business. Just make sure to keep the receipts and track everything properly. The IRS doesn't take, I think I spent around $500 as an answer. They need specific, categorized receipts. Mortgage interest and property tax deductions. Own a home? Good news. Mortgage interest and property taxes can be deducted if you itemize. This can be a huge tax break, especially in the early years of your loan when most of your payment is in the interest. Medical expenses and HSA, hidden tax savings. Medical bills piling up. If your medical expenses exceed 7.5% of your income, you can deduct the extra costs. This includes doctor visits, prescriptions, and even home modifications for medical needs. And if you have a health savings account or an HSA, contributions are tax deductible. They grow tax free and can be withdrawn tax free for medical expenses. It's one of the best tax advantaged accounts out there. In the future, I'll be creating a detailed video around HSA and how to maximize their usage. Tax credits, free money from the IRS. Unlike deductions, credits lower your tax bill dollar for dollar. Here are some you don't want to miss. Child tax credit, worth up to $2,000 per child if you qualify. Earned income tax credit. For lower income earners, this can be worth up to $7,000 plus. Savers credit. If you contribute to a retirement account and earn under a certain limit, you can get a tax credit on top of your savings. Education credits. The American Opportunity Credit gives up to $2,500 per student for college expenses. To qualify for these, make sure you meet the income limits, keep records, and file the right forms. Many people miss out just because they don't know what they qualify for. Okay, let's do a quick recap. So choose between standard deduction or itemizing, track business and home expenses, and claim all the tax credits you qualify for. Now, let me show you how tax advantaged accounts can save you even more. Tax advantaged accounts, your secret weapon. What if I told you that there's a way to grow your money, cut your tax bill, and retire richer legally? Sounds too good to be true, right? Well, that's exactly what tax advantaged accounts do. 401k and traditional IRA. Cut taxes today. If you have a 401k through work or a traditional IRA, every dollar you contribute is pre tax. That means that you lower your taxable income today and let your money grow tax deferred until retirement. And if your employer offers a 401k match, that's free money. If you're not maxing out the match, you are leaving cash on the table. Roth IRA. Pay now, enjoy later. Unlike a traditional IRA, a Roth IRA is taxed upfront. But here's the magic. When you retire, everything, your contributions and earning, comes out tax free. Imagine never paying taxes on your retirement withdrawals. That's the dream. HSA, the ultimate triple tax break. Got a high deductible health plan? A health savings account is your best friend. You get tax free contributions, tax free growth, and also tax free withdrawals for medical expenses. And after age 65, you can use it like a traditional IRA, no penalties. 5 to 9 plan, tax free education savings. Want to save for college without Uncle Sam taking a cut? A 5 to 9 plan lets your money grow tax free for education purposes. Some states even offer tax deductions for contributions. Tax advantaged accounts are your secret weapon to keep more money in your pocket. Now, let's talk about strategies the wealthy use to pay even less in taxes. How the wealthy reduce taxes legally. Ever wonder how the wealthy seem to pay less in taxes than you? Are they using some secret loophole? Not really. They just use the tax code smartly, and so can you. Business and side hustle write offs reduce taxable income. If you have a business or side hustle, you can deduct expenses like home office, a portion of rent or mortgage, travel and meals for business purposes, equipment and software. Even if you drive for Uber, sell on Etsy, or freelance, track your expenses. They lower your taxable income. Real estate tax advantages make the IRS work for you. Real estate investors love depreciation. It lets you deduct property wear and tear, reducing taxes even if the property appreciates. Plus, you can also deduct mortgage interest, property taxes, repairs, and maintenance. That's why so many wealthy people invest in real estate. It's a tax goldmine. Tax loss harvesting. Turn losses into savings. Lost money in stocks? Don't panic. Use tax loss harvesting. You can offset capital gains with losses and even deduct up to $3,000 against regular income. Basically, you turn losing investments into tax savings. Smart, right? Charitable giving and donor advised funds. Give and save. Donating isn't just good for the soul, it's great for taxes. Charitable donations are deductible, and if you set up a donor advised fund, you get tax benefits now while deciding later how to give. The wealthy don't cheat, they just play the tax game better. Now that you know their secret, let's move on to the final tips to maximize your savings. Pro tips for tax planning efficiency. Let's be real. Taxes aren't exactly fun, but a little smart planning can save you thousands and make tax season way less stressful. Here's how to stay ahead of the IRS like a pro. Work with a tax professional. It's worth it. I personally used a tax professional for several years, and honestly, it was a great investment. But once I got more confident, I switched to doing my own taxes using Free Tax USA. It's affordable, accurate, and gets the job done. If your situation is complicated, like multiple income streams or real estate investments, a tax pro can find deductions you didn't even know existed. Adjust your withholdings. Stop giving the IRS an interest free loan. If you get a huge tax refund every year, that means you overpaid. Adjusting your W 4 withholdings can put more money in your pocket each paycheck instead of waiting for the tax season. This additional money in your pocket can be used for investing and getting even more gains down the road. Use tax software, Free Tax USA and TurboTax. I personally use Free Tax USA. It's way cheaper than using TurboTax and it's still accurate. TurboTax is great but gets expensive fast with all the upsells. If you're comfortable with taxes, Free Tax USA saves you a lot of money. Plan quarterly if you have multiple income streams. If you have side gigs, freelancing, or rental income, don't wait until April. Pay quarterly estimated taxes to avoid penalties. Taxes don't have to be painful. Plan ahead, use the right tools, and keep more money in your pocket. Final thoughts. Alright, we just covered powerful ways to legally slash your tax bill, from maximizing deductions and credit to using tax advantaged accounts and smart strategies the wealthy use. The big takeaway? The less that you pay in taxes, the more you keep for your future. Don't wait. Start optimizing your tax plan today. Adjust your withholdings, track deductions, and open a 401k, IRA, or HSA if you haven't already. These small moves add up to big savings over time. Now, I would love to hear from you. Drop a comment below and share your best tax saving strategy. Let's help each other save even more. If you found this video helpful, then hit that like button, subscribe, and share this with somebody who needs to stop overpaying on taxes. See you all in the next video. Bye.